Hello everyone, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, and today we're diving into another exciting week in the markets. Let's break down what you need to know. After a holiday-shortened week, investors are gearing up for a busy one, with the spotlight on the upcoming inflation report. Last week, the labor market showed fresh signs of moderation. June's non-farm payroll figures revealed an increase of 206,000 jobs, a slight decrease from May's revised count of 218,000. Additionally, the U.S. unemployment rate ticked up from 4% to 4.1%, surpassing the Federal Reserve's projection for the year. Inflationary pressures, a major concern for both markets and policymakers, might also be easing. The ISM's Prices Paid Index reported lower than expected figures, aligning with the lowest rates since the pandemic ended. Furthermore, annual wage gains from the non-farm jobs report were at 3.9%, down from May's 4.1%, marking one of the lowest increases since the pandemic. In a note, Edward Jones strategist mentioned, "If inflation continues to moderate and the economy softens without falling into a downturn, markets should perform well." This scenario implies that the Fed will likely begin its interest rate cutting cycle even as the economy grows near trend levels. However, they added, if the economy falters and the Fed cuts rates to support growth, markets may not hold up as well, but we don't see signs of this. The economy and labor market started from a position of outsized strength that may now be gradually normalizing. Turning to President Biden, he's facing increased skepticism from within his party regarding his potential 2024 re-election campaign. Two additional lawmakers, Representative Mike Quigley from Illinois and Representative Angie Craig from Minnesota, have publicly urged Biden to reconsider running for president again. This sentiment of doubt among Democratic lawmakers, strategists, and donors suggests a search for alternative strategies or candidates to strengthen their chances in the forthcoming election. On the Fed front, Chair Jerome Powell is set to testify before the Senate and House on Tuesday and Wednesday, respectively. While the hearings will primarily focus on monetary policy, analysts expect questions on regulatory issues including Basel III Endgame and bank liquidity changes. Powell's responses could set expectations for upcoming regulatory proposals. Now let's talk about the highly anticipated inflation report for June, set to be presented on Thursday, July 11th. Expectations are for a 0.1% month-over-month and 3.1% year-over-year change, with the core CPI expected to increase by 0.2%. Bank of America expects the year-over-year change to come in at 3.2%. They noted, "Should the CPI report align with our expectations, we maintain our forecast for the Fed to start its cutting cycle in December." However, another 0.2% month-over-month print for core CPI could tilt the risk towards an earlier cut, especially given signs of softening activity. As the Q2 earnings season begins, early reports suggest a robust performance for S&P 500 companies. Projections for Q2 2024 suggest an 8.6% earnings increase compared to the same period last year, with revenues expected to rise by 4.7%. This anticipated growth marks the most significant increase since Q1 2022. JP Morgan Chase, Wells Fargo, and Citigroup are set to kick off the season on Friday. In addition to the CPI report, investors will also focus on weekly jobless claims and the U.S. Producer Price Index (PPI) report due on Thursday and Friday, respectively. So, from the U.S. jobs report and inflation data to Powell's testimony and Q2 earnings, this week is packed with events that could drive market movements. Stay tuned and stay informed. That's all for today's Capital Markets Quickie. I'm Endrit Cela, wishing you a productive and insightful week ahead. Tune in tomorrow for more updates and market insights. Have a great week, everyone.